Well, turns out that this is not a pretty normal week for one of these conferences, right? So let me first start off by thanking everyone who's decided to make it here. Clearly, this is we all had choices to make, and I really appreciate what all of us decided about coming here to attend this. As the introduction mentioned, I've spent my entire career in the field of analytics. And as you can imagine, a lot of that is in looking at how humans process information versus how machines process information. A ton of work on machine learning and artificial intelligence. Now, once you start doing that over a period of time, you start developing this perspective of what do machines do better than humans? What do humans do better than machines? And humans actually do very, very well in terms of decision making. There's a number of different criteria that we process much better than machines. The one exception to that, the one very big exception to that, is assessing risk, is how do we actually place probabilities on certain outcomes or certain events happening, which is effectively the basis of underwriting, of risk assessment. Now, the exception to that rule, though, are the actuaries among us. So if there are any actuaries here, kudos to you guys, because you're much better. And I think also everyone that's decided to come here today, because I think you guys nailed it in terms of assessing that risk. So thank you once more. I was reminded about the story about risk this week. I live in New York City, and over the weekend, I went out with my kids because we realized that we'd run out of hand sanitizer at home. Now, you would imagine that in New York City, be plenty of stores, but we actually couldn't find a store that was stocked up on hand sanitizers. They'd run out, every single one of them. So, in a crazy world like ours today, I think that point more than anything else reminded me again about how important risk is, or risk protection is, in our lives. And that's kind of what I wanted to talk to you about today. So in looking at insurance, I think the panel talked about, and I think they got this theme perfectly right. Insurance as a product, as a concept, is never going to go away out of our lives. It's core to who we are as humans. It's core to who we are in terms of having assets, assessing the risk against the asset, and trying to protect it. But having said that, there are certain challenges that the industry is facing. And the big challenge is really the fact that at the end of the day, there is a declining trend in overall premiums. There's somewhat of a decline, as you can see, in the life insurance premium, and even the non-life, or the property and casualty premium hasn't really risen at the same rate that we would have expected. And that problem becomes bigger when you start looking at some of these stats. There's a huge coverage gap that's emerging. And the coverage gap is leading to effectively a large population of the millennials and people in Generation Z effectively not buying insurance or not buying protection the same way as previous generations did. Now, take a look at some of those numbers. 30% of the population has life insurance. Now, I could look at it as a glass half empty problem, or conversely, I could look at it as a huge opportunity for someone to step in there and come up with the right product and with the right offering and effectively make a killing. And that's kind of what we hope that you'd all take away from the next 2 or 3 days of this particular session. And that's part of what we've been working with all of our customers on in kind of developing that particular product. So our viewpoint, and in working with a number of different companies, is that in order to capture that particular opportunity, there are certain things that insurance needs to get to. Now, EXL, as part of what we do, does a ton of work with other industries. We work with banks, we work with healthcare companies, we work with retail companies. And what we've tried to do is kind of bring in some of that, certainly some of that customer management skill set, some of that understanding of customer data and using customer data to drive product segmentation, some of that thinking to insurance. And here's what we found has worked. Fundamentally, when you're trying to create a new product for this particular segment, the millennials, one of the most important things you've got to do is solve for speed. We just take speed for granted in terms of some of the things that we do today. I recently applied for the Apple Card. It's the new card on the iPhone that Apple has offered. The entire process of application through to the card actually being activated on my phone took, I'd guess, about 180 seconds, if I'm being maybe 5 minutes, no more than that. I compared that to my experience with buying an annuity, where were it not for a really, really, really patient insurance agent and 3 or 4 months of nagging and forms and sending stuff back and forth, I probably wouldn't have seen the end of that transaction. So there's fundamentally a big shift that needs to occur in the way the industry is looking at speed and speed through all aspects. The second part, and this is something that the panel hinted about, is just customization of the product. You've got a market segment right now that's actually looking at insurance and looking at asset ownership in a very different way. The phenomena of Uber and Lyft has actually taken, at least in urban centers, the car ownership population down. There are folks now that are looking more for episodic insurance as opposed to over a long-term period. Now, what we are looking at this, especially is the way the banks are thinking about it, is trying to take the segment size of products and trying to bring that segment size down. We call it hyper-personalization. But that's something that's now going to be core in terms of the way the insurance industry starts creating some of these segments or some of these product differentiations. One of the other features here for customization is also shrinking the tenure of that insurance down. So we are now we're working with some of our customers right now in trying to come up with, like I said, ride-based or usage-based insurance, where the term of that insurance product is now shrinking dramatically down from, say, 6 months of a car insurance to basically down to 2 days or 3 days, or in certain cases just down to 150 miles, and trying to see what is it that you can do in terms of differentiation from that. One big area that companies are focusing in now is the whole customer experience part of it. This goes back to that Apple effect that I talked about earlier. It's no longer, you need to have something that cuts through the clutter of what all of us are seeing in terms of our daily lives. When someone buys insurance today, they're not necessarily comparing an insurance product from company A to company B. They're certainly not thinking about it in terms of, hey, I'm buying insurance and here's how the insurance buying experience tends to be. I think what they're comparing it is with the experience with how they deal on Amazon, or how you go onto a particular website and it's got to be on a phone, it's got to be on an app. So customer experience and customer design, I think, is one of the big innovations that's happening in the insurance industry right now. And we are seeing a ton of companies spend a lot of money and a lot of investments in terms of coming through with differentiation there. And finally, pricing. And this again goes back to the concept of what is it that you could do in order to come up with a product that appeals to the millennials and the Gen Zs. And that's been a big area for us in terms of seeing what is it that you could do to drive the overall cost of the insurance operations down, so that the pricing then starts becoming a clear reflection of just the risk premium and allows you to get the differentiation that way. Now, this is actually one of the big areas where the UK tends to be different from at least the US market where I come from. The UK, especially on the car insurance side, has almost entirely moved on to online and aggregator sites, where pricing becomes one of the biggest differentiators in terms of the type of customers that you acquire. And we actually, on the US side, look at it and say, well, this is probably where our market is going. So you're clearly ahead in there. Now, I just want to kind of move on to, so what are companies doing in order to get to those four areas of differentiation? And again, this slide is going to talk to you about our experience with digital innovation programs and transformation programs across a host of different insurers. But what we've done is stepped back and said, can we think about it in terms of 3 or 4 different buckets? So bucket 1, this is where most companies start. It's the digitization of operations. Taking a look at all of that work that happens in claims processing, taking a look at all of the work that happens in how you ingest data, how do you process data, and digitizing and automating that, effectively dropping the cost, but probably more importantly, taking that time lag that occurs in terms of processing those things way, way, way down. The whole idea is effectively, can you process your claims for a lot cheaper? Can you actually process your claims a lot faster and drive differentiation through that? Next big area, going back to that same thing, customer experience. And I've talked about it as customer experience like banking because these are real conversations that we have with our customers where they come in and say, I want my customer experience to be just like the banks. But I've also had conversations with customers where they're now showing me the way Amazon sells them products and say, can you try to replicate this? So I think that the field there is narrowing. The next one I think is probably going to have the biggest impact in terms of how innovation is going to drive the digital transformation. Now, you heard the panel earlier talk about this as well. There's just a ton of data available in terms of IoT data. There's a ton of data available, as Raghav talked about, in terms of health data. And there's a lot of work that's happened in terms of what is it that you need to do in terms of getting that data from customers and then using it in terms of your product differentiation. Now, our experience has been that there are 2 things right now. First of all, this is evolving, but for the most part, a lot of companies are way behind where they need to be. The innovation talk that we hear doesn't really show up in terms of the real products. And the reason for that is twofold. Number 1, I think there's a lot of thinking that still needs to be done in terms of what is the customer getting in return for that data. So we were talking about earlier, what is it about privacy and customer sharing data, but at the end of the day, the reason we actually share our data with a Google, for example, is because we're getting something in return for that. It's the convenience, it's the customization of offers, it's the experience. In certain other cases, like IoT data, we share that data because we get a discount. We get something back in return of monetary value. And I think that's going to be one of the keys in terms of how do you actually start getting access to that data. What is it that you're offering in return? How's the product getting created? The second part of it is actually more internal to a company. And that's the fact that most companies that we work with today don't really have the capabilities of actually ingesting that data or actually handling that data. I mean, we still deal with companies, and I'm sure you've seen this all the time. There's still tons of Excel sheets floating around. If you walk into a broker's office, you've probably got 10,000 different Excel sheets coming in every other day. And we're talking at one point about saying, well, let me get data from all the devices, on clicks, on left turns, on right turns. On the other side, it's, I've got policy data that's sitting on a file somewhere, and I don't know how to automate ingesting that. So bringing that spectrum together, I think, is one of the big areas where the investments are going in. And we particularly feel that that's an area where most companies are going to get, they're spending money right now, but in terms of the return on investment, that's probably where they'll get the biggest return. And finally, again, going back to what the panel earlier was talking about, there is going to be disintermediation. There is going to be a threat from new entrants into the space that are coming up with newer offers, that are going to come up with newer products. And that's something that everyone in the industry needs to be aware of and needs to start coming up with alternative offerings for. Now, what we've seen is, particularly with the large insurance companies, that a lot of this is happening either that large companies are taking an approach of effectively trying to disrupt themselves, trying to create new innovative groups, or in certain cases doing some amount of M&A to try and bring in certain teams and innovations in. And we think that that's probably going to start picking up a lot of speed. So now what we've done is I've just put together an example of something that EXL is doing right now with some of our life insurance customers. So effectively, we've come up with a plan for helping some of our life insurance customers make that journey and make a journey in terms of changing certain parameters about how they actually interact with the customer every single day. Some of those themes you've already heard, bringing down the policy issuance criteria down to hours and making sure that the customer experience is the same as their experience with the banks, and very importantly, that the underwriting is straight through. And within that actually lies an enormous amount of work in terms of coming up with alternate data and using that alternate data to drive the underwriting. And this is something that we were talking about earlier. The EXL team just got together as we were preparing. About 6 months ago, or even a year ago, we would have talked to you about this as being a point of arrival. This is an example of how quickly the world has changed already. Some of those things that we're talking about here, the issuance being down to hours, the straight-through underwriting now being a very high percentage of what a life insurer writes in terms of the overall policies, those things are already here. And that change has happened very, very quickly. So to me, this is an example of how quickly the industry is changing. Maybe next year when we are here, these things would be passé, and we'd be talking about some completely different product innovation. Running out of time, so let's move on finally to what's the big so what. So as you're thinking about what does all this digital disruption and all this digital transformation mean for each one of us, as someone who works at an insurance company or is thinking about the insurance space, we've tried to distill it down to 3 different factors. So number 1, what's the goal? At the core of everything that we are talking about today is effectively that same promise, the concept of risk protection for a customer. And if we're true to that particular concept, and if we're true to saying, I need to understand for that particular customer, what is that risk, and what's the best way of actually creating a protection product for them, or a wellness product for them, then that's going to be the core of how insurance keeps evolving. We've taken a stab at the how, and this is speaking to the digital transformation journey that I was talking to you about earlier. So the way we believe that the digital transformation journey that needs to happen for most insurance today is, number 1, to start with the outcomes. To start with effectively, what is it that I need to do? Is my focus on making underwriting more data-driven? Is my focus going to be on bringing that claims processing down to hours and minutes? Is my thinking going to be on driving the product differentiation down to a number of different parameters and shrinking the tenure down? It's the outcome that matters. The second part of it is, and this has changed dramatically as well, is no longer do customers, or at least our customers, do 2-year or 2.5-year long enterprise transformation projects. Those days are passé. You have to be able to kind of break that problem down into very small, manageable bites and come up with something that's very, very modular. And that leads into the third big insight, which is, in this environment, no one can do it alone. No one can do it alone. The days of building something that was custom for you, that was your bespoke solution, you had your internal team work on it, and are gone. At this point, most of our customers are already migrating their infrastructure to the cloud. They're using a number of pre-built configurators that are there, a number of pre-built options, and the end result of that, it's resulted in a dramatic drop down in the cost of building some of these innovations, just dramatic. And the second part of it is the speed of running some of those things has gone way faster. So we believe that innovation is something that's actually going to drive the speed of change throughout the industry. And that's the final point here. At the end of the day, we believe that the difference between customers or insurers that are going to be winners, that are actually going to go out and solve for that big coverage gap and claim a huge market share, versus ones that don't, and that languish is going to be the commitment to the change. And that we believe comes from right on top, and it's something that most companies, most successful companies, adopt effectively as a matter of their culture. I'm out of my time, so I'm going to stop right now, and maybe I've got a time for one, maybe two questions before we end. Any questions?
Thank you. It's Tobias from EY here, and I absolutely agree that with everything we do, we should have the customer at the core. I'm not so sure, though, whether or not our customers really want to have a relationship with insurance like they have with the bank, because the frequency of interaction is obviously very different.
Yep.
They only interact with insurers for either buying a product or renewing a policy, or when something goes wrong. So I just wonder if you've got any thoughts you could share. So
you're absolutely right. Banks and insurance, or my checking account versus my life insurance policy, are two fundamentally different products. The extent of interaction that I have with each one of them is fundamentally different. I think when we were talking about the experience like banks, it was more something that we hear from insurance companies from within. It's not something that customers are demanding. It's more stuff that the insurance companies basically say, I need to have this type of a customer experience. Now, that could be when you're actually trying to get someone to get to a quote, or from the quote to conversion, so the onboarding cycle. It could be your policy renewal time. It doesn't really speak to the number of interactions, but they're trying to speak to the kind of experience someone has during that interaction. But you're spot on. I think at the end of the day, these are fundamentally different products. So you're not going to have the same richness of transactional data that you have, that banks have on the insurance side. And you're trying to kind of bridge that gap in some way. Any other questions?
I'll shout.
I can hear you.
Build modular. Is that essentially for sort of risk management of the IT infrastructure that you say is better to build modular? So that I would understand. But then my question comes, how do you manage, legacy and brand new modules alongside each other? How do you version? How do you kind of make sure that you don't end up with a zoo of different things that you lose control of?
So just to repeat the question is about build modular. And clearly, if you're building modular, you are going to, at some point, have your big legacy infrastructure, and then your new, smaller, more innovation-oriented infrastructure. It's a problem that we see all insurers have. And I think what we've seen most insurers do is effectively start creating a transition roadmap where you're shifting to the new infrastructure almost in a product by product or by a book of business. And by doing that, what you're allowing yourself to do is test out the new infrastructure, make sure that you kind of smoothen out the wrinkles there, the teething troubles, and then start putting bigger volumes on it. We do not advocate, and we haven't seen anyone that basically just says, all right, I'm done. I'm going to turn the legacy off and switch over to my brand new infrastructure right away. I mean, not even anything close to that at this point. So the point about modular was more from the test and control as opposed to the big transformation. All right, I think I'm getting my hook, so thank you. Thank you once again.